Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. At present, the Australian dollar is attempting to reclaim that top side. As we move into the second day, the bullish candle is holding, and therefore keep an eye on the RSI. It's not overly strong. That means from the 60-day moving average, which is around 71.6080, could see a rejection, and therefore I do expect to see another downward test. The minimum pullback at this stage will be holding around 71.05, but I feel the market could actually sink in deeper around that 70.55 and reassess from there. Looking into the euro, all eyes on the US minutes for January. The market will be looking to see or look carefully for any clues into whether we can expect a rate hike in March from the US Federal Reserve. Nevertheless, from the current pattern, the market is testing this support level, seen around 113 figure. We did get a few stabs under there in the last two attempts, but nevertheless, the RSI is weak, and therefore the MACD marrying up to that could actually see a further slide. Now, a break of 113 exposes the region of 112 to the objective, which was the recent low that comes in around 111 and reassess from there. Upside attempts should find towards that top side where that spinning top is to mark the bears are ready to ambush any challenge from the bulls. Into the third consecutive day, the market is now finding a bit of a choppy price action for dollar yen, as the interest for safe haven is somewhat backed off a little, and weaker yen is being seen against the US dollar after the news wires revealed or reported that Russia has pulled partially out of the borders near Ukraine. That is to ease some of the tension, and that is that the market has found a little bit less safe haven demand. Nevertheless, I think the market will eventually test line and look towards 114.70 with a cap around 116. Looking at the UK CPI numbers out later, the market is still going sideways for the pound and still holding above that level of 134.50-60. I feel the market can actually challenge there, but the top side still caps at 136.60 and a little to go on other than that. The 4-month trend line for sterling Kiwi still looks in focus for a challenge, that is, and if we see a break, I'm looking down towards the 2 area as a potential measured move. So as I mentioned, the market overnight found that Russia did actually pull partial of its troops from the border of Ukraine and said it was just a training exercise. Nevertheless, we've got a gold posting an outside range today that waits confirmation. Now, a break of 1,844 will give further indication to the downside and look towards 1,814 to 20 as a measured move. Keep an eye on these technicals and not quite confirm the bearish case, but if we do get the break on that support level around 44, then I feel we will get a weaker play. With a 3% drop in oil, the bearish divergence kicked in quite aggressively and still can actually continue its slide towards the target of $86 a barrel and then reassess from there. Well, that wraps it for the day. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.